In this world where nationalism is at rise, it was a fresh air for me to be seated here over the last day and a half to see not only two countries coming together individually, but also trying to bring the two continents together. So I really applaud you both and your organizations for doing that, and thank you again for hosting the first Afro-Asian FinTech Summit. So now moving on to the big questions. I will try to make it a hard talk and rather than a fireside chat with your permission. The, the talk is called Big Tech Chat, but I believe it's more about what is the foundational stack or the digital infrastructure for the future for the poor. If I may, I would love to start with you, DG. Help us and the audience understand, as you look at this foundational stack, the digital stack of the future, what elements are there in this stack? What, in your view, Kenya already has, and what are the new elements that need to be added or improved upon? And equally importantly, what will that new vision change for the people of Kenya? What's going to be different in future?
Let me say good morning to everyone. Thank you for coming. I think this festival has been very special for all of us. And I was sitting this morning when I was in the front and listening to the whole dialogue between technology and the banks. And it occurred to me that last month I went to visit a school which we support as the central bank, and it's 170 deaf children. And we arrived there and there was a handful of central bankers. And when we went in, the children were all very busy doing their thing and obviously talking to each other and expressing themselves. And we went to plant a tree, and as we were planting the tree, I noticed the children were looking at us and almost with sadness. Because there they were talking with their hands and understanding each other. And as far as they were concerned, we could not talk and we could not understand. Because for us, we don't speak their language, and for them, they don't speak our language. It was a very surreal experience, and sometimes I think when we get into these tech discussions, there is that inability occurring. The people who are talking are not being understood, and the people who are listening don't understand. So I think this type of festival gives us this opportunity to stop and think about what we're saying, think about what we're hearing. I've been sitting next to one of the senior management staff of Safaricom and been teasing him about various things like cloud. Now, when I talk, does he hear me? When he talks, do I hear him? So I think we need to be braver and we need to be more open as we go forward on this journey. Addressing now the issue of the stack. I mean, for a lot of us, we wonder what the stack is. But let me try and break it down into three components. It's really identity, know your customer, KYC, and also data. So if we start with the concept of identity, and this seems such a straightforward thing to those of us that have been privileged enough to live in a society where you are in a fairly elite state. So as you're born, you're recognized, you're filed, there's an official document given on you. And so all through your life, whenever you stand up in front of people, people can identify you. You're unique. But in so much of the world, and I think a World Bank report that's come out, it shows that 1.5 billion people do not have official identification. This means that they are prevented from participating in the political. You can't vote. In the social, you can't go on a lot of these social media sections. And you can't also enter the fintech world. You can't participate in the financial sector because you don't have your unique identification. So this is a very real problem, and many governments around the world are trying to deal with it. We see that India has been the most successful with their digital recognition of 1.1 billion people. I think that's the biggest in the world. And I see that Singapore and Kenya also have IDs for all adults within the country that are in the country. They have to have their official ID. In Kenya, we've also moved further, and we've opened what we're calling Huduma centers. And we're hoping that these centers will be a single point of reference for all your identification, and that each Kenyan will be able to be identified by this number. So that deals with identification. If we then talk to know your customer, and being a Kenyan policymaker, being a deputy governor of Kenya, this is the one that really scares us quite a lot. You've got to think about terrorism. You've got to think about illicit funds. You've got to think about attacks by unknown parties from cross borders. This whole issue about know your customer is a very real and modern issue that must be dealt with. And yet, collecting data is very expensive. Understanding the risks is quite difficult. It requires you to have many skill sets. And so putting together a KYC structure is not an easy thing to do. And when you're talking KYC and when you're talking identification, obviously you're talking data. And we heard someone this morning talking about the humanity of the way we deal with people's data. And so we talk about the security factors, we talk about the uniqueness of that data, we talk about the accessibility of that data, and we talk about the approval. My medical records, should those be accessible to other people or not? So there's this whole debate going on, and this is what the Central Bank of Kenya and the Monetary Authority of Singapore is looking at when we're talking about the stack. And we want to see what we can do as Kenya, because Singapore has moved ahead of us. Want to see what we can do as Kenya to leapfrog this challenge that we have and move to the next stage as quickly as possible. And in that, we are going to be, through the MOU, we're going to be referring to the Monetary Authority of Singapore to help us. They have an eKYC, a robust, actionable, practicing, operational eKYC. And Kenya wants to see, with those three things, identity, data, and KYC, how we can put this together to move Kenya to that next stage and protect our financial sector further. So I think that answers the question.
Thank you, DG. Swapnendu, would love to hear your thoughts on Singapore's experience on when you focused on these foundational systems. How do you making them industry-grade perspective, as you say often? How did you do that, and how did you overcome that challenge?
Thanks for having us. And I think just to add DJ's perspective on the foundational stack, one thing I would like to add on top of the stack is there's the payment layer, because we have to first identify digitally, move money digitally, and underlying is the whole KYC infrastructure, is a trusted data piece. There's one also piece which India is dealing with, is the whole consent architecture, because we have to find an electronic way in the world of digital, faceless, paperless transaction to empower citizens the right to share data in a way it's not filled with 1,000 pages of disclaimer, but a clear, easy to understand what data you're sharing to third party. And the other two ancillary stack elements which we started thinking about, how do we create another foundational infrastructure which allows non-financial sector data to be exchanged through a common gateway? Because as the sector is getting far more merged into this other non-financial sector, there is a demand for other sector to contribute to data. And the last piece to the puzzle is there a space for a foundational infrastructure for experimenting? So that's the expanded, extended version of foundational stack. In our own experience back in Singapore, last year, to DJ's point, banks were opening accounts to this old process of paper, come to the branch, show your face, and do all the processes. And when we put a process and a foundational infrastructure, in a sense, it was there, but all we did is we pulled data from existing original trusted sources. We did not create a new data source. All we did, there are existing agencies which were collecting data, and we didn't change anything in that process. They were the golden source. We aggregated data on a real-time basis through an API architecture, used that way to validate the customer to the trusted data source. So that gave us an unprecedented scale without trying to build anything new. The second piece is that the whole process of consent being built into it. And third, using your own identity, which is a SyncPass, which is a Singapore identity, a two-factor authentication to seamlessly pull the data into the system, with the banking system. But something I want to share here, what we did, perhaps not by design, maybe by luck. In 2015, when we started thinking about fintech, while the whole world was talking about open banking top-down, forcing banks to open the pipes, we started a bottoms-up strategy. We worked with the bank on an API strategy, and I want to bring it very important in this context of foundational stack, because when you work with the bank, banks were quite comfortable with the idea of building APIs, building the pipes, allowing some data to be exchanged with third party. So by 2018, most of our banks had published their APIs in a way to start interacting with the startups. Now we have the foundational infrastructure in place. Banks by design could integrate faster. Now imagine a situation where you put the public infrastructure in place and there's an API-driven data consumption, and your banks are not ready to consume. That's what's happening in open banking, because you have a policy stance, but the banks are not ready to accept that process of consuming the data. So the second part of your answer to your question, the consuming part of the ecosystem must be ready to have the necessary tech infrastructure to give that scale and the seamless experience.
Thank you. I'm glad you acknowledged the luck, because that corresponds with the learning approach you have taken, as your senior minister also mentioned yesterday. And often we feel like this was very well planned, but the importance is how do you experiment and learn. But I also want to applaud you for sharing it with others proactively, so that we don't have to everywhere reinvent the wheel from the scratch every time.
Thank you.
DG Sheila, if I may go back to, before asking you to talk about risks and what risks do you see, maybe we can start with how will the lives of the people in Kenya change? There is already a lot of great progress, coming from 26% to 82%. What will this stack change for the lives of the poor especially? And then maybe we'll go back later in the discussion to the new risks and how we manage them.
I think that it's one of the questions that came up this morning when we were talking about financial inclusion, and people were asking, is it financial inclusion that's our end game? And obviously that's not the end game, but it's a necessary step to get to the vision that we have. And what you have when you have 83% financial inclusion at a very simple level is people able to transact. So you then have to ask yourself, what is that actually doing to their livelihood, and what is that doing to their productivity, and how is it benefiting them or hurting them? And I think that's the stage that Kenya is now at, and that's the stage that we're trying to analyze. I think for those of you who have been in Kenya over the last month, you would have seen that we've had a problem with betting, which has obviously been encouraged by the fintech technology that we have. And so the government has now started taking some action on the betting industry to try and curtail some of the worst parts of it. So as we go forward as well, we have to look again at what other aspects. For example, if you look at terrorism, when you look at the ability to use fintech products to move illicit funds without them being identifiable. Again, that's a problem that we face going forward. What are the benefits then that we can see? If you were to take, for example, which I think is a story we've told many times, but let me tell it again. We talk about the lady who has 2 children and is in the lower end, the lower spectrum of income. And she can wake up at 4 o'clock in the morning. By 5 o'clock, she's downloading her loan onto the phone. And by 6 o'clock, she's getting her kids up and sending them to school. In the meantime, she's also ordered her products to be taken to the marketplace. She goes and she trades all day on her phone. She comes home, she looks after her children, she puts them to bed, and then she pays back her phone and banks her profit into her account. These are the benefits, but we haven't actually studied them enough or quantified them enough. I can give you many other stories about mechanics. I can give you stories about people that I have interacted with personally, where they've told me that this is the only source of quick, accessible, dignified funds that they have. So we need to study that more. How do you make it more dignified? How do you assist them more? And also keep watching, as I say, the negative aspects that concern us.
Thank you for capturing both the negatives and the positives. Swapnendu, a similar question to you, but more focused on ecosystem development and managing the risks as you were doing that in Singapore and your experience even beyond Singapore in the Asia region where you have been very active.
I think the way I would frame this is that how the new architecture is getting constructed in the whole space of tech-enabled financial services. And I was in China 2 days back, and I met a bank called WeBank. And I had a fascinating insight from them as how they think about the new construct of financial services in this new ecosystem. They use this interesting way to look at how to construct the future digitally transformed ecosystem. And the first thing they talked about, I think we tend not to do that, is technology. It's almost fundamental to the whole architecture. And for the new economy to succeed and for the new tech companies to succeed, they must bring down the cost of technology below $1. And if you take India example, it is $1 per, I think it is $1 per citizen cost. And for any digital bank or any fintech or any licensed bank which is looking to digitize and transform their existing infrastructure, they must get to the point of it below $1 cost. And that needs remarkable re-architecting of the existing systems they have. In fact, WeBank, as an example, don't have any data center, but they run a far more secure, well-designed, highly scalable operations at below $1 cost. The second piece is the whole puzzle is the traffic. You must have traffic to actually make it a meaningful product and a feasible, sustainable business. And to get that traffic, you got to have a foundational infrastructure. We talk of the foundational stack. With the telcos must have the broadband in place. So how do you get a traffic coming to this ecosystem in a way that they're sustainable? And the third piece they talked about is the whole technology piece and the whole talent piece. And while Deji and me had a side conversation on how we look at talent, but interestingly, the Chinese giants have interesting stats. More than 50% of their employee base, or the TechFin companies, have some experience in technology. So they're predominantly driven by tech-savvy, or not necessarily engineers, who drive the future construct of the employee base. And the fourth one was interesting because that was a surprise to me. They use what called transparency. Transparency to your consumer, transparency to your stakeholder or shareholder, and more interesting, transparency to your regulator, which is a very interesting shift we are seeing among the fintechs in our ecosystem. They believe transparency to your regulator is a big part of the new construct. And the last part of the T was the timing, is good luck. And from a policy standpoint, it's not about more of good luck. How to ensure the ecosystem is sustainable for the startups to survive in the period they're not ready for a commercial launch. And there's a need for a set of policies for a country to have where the startups can survive in a very frugal way, and they should be prepared for the right opportunity to plug in the product. So if you take all the 4 Ds or the 5 Ds in a one package, I think that will define the future ecosystem, and this will be the ingredient for the most sustainable digital transformation of the financial sector.
Thank you for all the T's. we discussed briefly, in my view, we're trying to make markets work. This is not about subsidizing activity, it's about trying to empower, enable the private sector to serve everybody inclusively. How do we think about engaging the private sector in the journey of developing this stack, developing these potential public goods, which finally have to be leveraged by the private sector to serve the people in the country? So starting with you, DG, would love your thoughts on how to enable or engage the private sector in this journey.
I think that central banks, by their very character, are not developers, designers, innovators. Our role is safety, security, stability, which is quite different. And so you would ask the question, how did M-Pesa emerge in the Kenyan markets if the regulator is of that mindset? And I wouldn't say we changed our mindset. It's like what I said when I started about the deaf children. What we tried to do is we tried to listen and we tried to understand. And I hear people talking these days about sandboxes, but in fact, we've been doing sandboxing for 10, 12 years. And it started at that stage where you have an innovative company willingly, because there were no laws in place, willingly coming forward to the central bank and saying, this is what we would like to do, and this is how it works. And us willingly, because we're not their regulators, listening and trying to comprehend what it is. And there was a lot of testing going back and forward as to how it's working, whether it's working, what can be tweaked, what can be done better. I remember being very impressed because I wasn't part of that process, but I remember being very impressed from my background as a protector in understanding that the money movements were being reconciled every 3 minutes. Every 3 minutes. So even at that early stage, there was this openness. I think even now as we go forward as the central bank, we still have the same kind of sandboxing approach. I know there's some work we're doing with the capital markets. And again, we sit and we have regular meetings with them and regular discussions until we understand what it is they're saying and until they understand what we're saying. And then the testing can begin. So I think the openness as we go forward, and I think someone called us pioneers, maybe that's the sign of us being pioneers. And you know, they said also desperation leads to this pioneering spirit. So maybe we have no choice.
And this event is a testament of your openness to listen and engage with the private sector. So thank you. So Prendu, from your experience, any insights that you think can be transferred to the continent of Africa in terms of engaging the private sector? Because
Yes.
you've come across this journey fairly rapidly, I would say, in the last 5 years,
Yes,
as Governor mentioned.
I think I will start with the repeated phrase Governor Patrick uses, class project. And what he meant is that a lot of fintechs start with this class project, quote unquote, and I think his worry is that will this class project be real projects or real industry grade product? I think over the last 4 years, and I've been talking to fintechs globally to many parts of the world, there was this gap which needed to be solved, is how to ensure this class projects get into a production grade journey, and what are the solutions we as a public policymaker can provide. And that led to this platform we built called API Exchange. And the reason I want to talk about it today, because this is something very critical for the industry to look at. What it essentially does is, if you are a small startup and you have a great idea and you put a open source, quickly built software, and you want to sell it to a bank, best of luck. The procurement process in bank will just throw you out of the door. So the way to do that, you need to put a platform which lays you to the journey of scalability. So what we did collectively with all the bright minds across many countries to put together a platform called API Exchange. What it does, it allows startups to put their products onto the platform. It's a completely cloud-based. We also brought the banks to this trusted platform where there can be they have a space in the platform where they can work with the startups and test their products. They can also write software code to build prototype with the startups APIs, and they can test in the market without affecting their existing production system. The whole journey of innovation discovery, from testing the APIs, connecting to a prototype, connecting to a synthetic database of their bank, and building a very simple solution, opening up to the tech community, opening up to the consumers, their target consumers, before they make that decision to bring that startup to their own banks for their digital transformation, was a huge way or opportunity to just break that barrier. We also looked at one other fundamental problem, which is most of the banks have very strong legacy infrastructure. We also looked at opportunities where we can build a set of libraries or set of software solution which can translate legacy to the new APIs connectors. So together, we put this platform. In fact, today afternoon at 1 o'clock, my dear friend Naveen is going to showcase to mostly the banks and fintechs here, how you can come to this platform and start building that journey of innovation and get into the system. Because my biggest bet, and I heard it in China, I heard it in India, and also hearing many parts, the two big game changers are going to happen in next few years. The rise of 5G network and the rise of B2B. What are B2B? These are the companies who are writing remarkable tech solutions, going behind the banking regulated banks and transforming the back office, middle office, and front office, and bringing down the whole cost structure to below $1. And to do that, you need a platform to build that journey to take them close to the production. I think that's the way we are looked at. As a fintech, we can't have policy paper, we need real systems. So that's our contribution to this journey of building a system. And hopefully, right in Kenya and Nairobi, we'll launch this platform very soon, and we'll have our African continents to be part of this whole journey.
Excellent. You never fail to blow me away, Swapnendu. I'm hoping the MOU that was signed yesterday included all the 10-15 elements that Swapnendu mentioned, and not just the 3 broad themes. And hoping all the goodness of the collaboration and the learnings you have done over the last 5 years, a decade of the fintech journey, can be transformed to this continent. I will flip the order for my last question because I want to give you the last word, DJ Sheila. So we'll start with Swapnendu. What is your one key takeaway from the last, you have had so many discussions in the last day and a half, or maybe preparing for this, you have had much longer days and nights, but what is your biggest key takeaway? And while you think about that, and probably you've already thought about it, I just want to highlight 2 key words that resonated with me a lot in the last about 30 minutes. One is listening. Listening to the private sector, listening to your stakeholders. So thank you for both highlighting that and demonstrating that. And then transparency, the point that came from Swapnendu. So I would say being a good listener and focusing on transparency can really help us manage a lot of risks and engage a broader ecosystem in trying to build a more robust, inclusive stack. So with that last few words from me, I would like to turn it over to you, Swapnendu. What is your one big key takeaway?
I think as my honest takeaway has been, what is the next? I think I'm going to work with the African ecosystem. I think one promise we should make, DJ, is that at least get few countries into a foundational stack as soon as possible. I think we have enough history, enough evidence that foundational stack is the way to go for. We don't need to do another policy research why we need a foundational stack. Now is the time to take all the work done in different parts of the world, build this infrastructure in hopefully next 2 years. 2 years is a long time for me, but I'm willing to give that 2 years.
Thank you for being patient. Over to you, DJ Sheila.
I also want to really follow through with what Swap has said. Data should not be commoditized. So what we should do now as policymakers and as government is find a way to help the fintechs, to help the commercial sector move forward through this very difficult KYC structure, and to find a way of preparing a stack, and whether it can add other values and other protections and other benefits, so be it. But we need to move quickly into that space. And what that will do is it will release a lot of these fintechs from some of the difficulties that they're currently experiencing in being able to move forward. So I like you, Sop, I believe that you don't come to festivals just to talk. There should be something that comes out of that, and there should be some impact. So I'm hopeful that in less than 2 years, we will have a Kenyan stack. And I know sitting in the audience today, we have other African governors, and I welcome them to join us and to be with us on this journey. Thank you.
Excellent. Thank you. A big round of applause for both of them.
I just to add, I have a very stressful panel today because I have a boss here and I have my wife and kid here. So very bad time to sit on the panel and do this.
You did very well. Go enjoy the safari you're about to go to. Thank you.